Hello, good day from Accra, Ghana. I am Henry Nathaniel Nanati, Managing Director and founder of a cement company in Ghana of West Africa called Ghanafix Ghana Limited, also known as Ghanafix Cement. It is a privilege to be part of the speakers of this distinguished co-speakers and this highly esteemed Smart Money Match Capital Introduction Summit. Thank you, Mr. Martin Signa of Smart Money Match, Managing Director for Finance, for including me in this summit. Being a startup entrepreneur myself, there is one seemingly common challenge all startups in Africa are facing due to the scams and internet fraud that are going on online, which has caused investors panic globally to consider investing in Africa. One scam or internet fraud could well scare investors not to invest in Africa, while most prominent startups are readily available and mature for investments. It is like the domino effect where one event causes a series of related events, one following another. The domino effect comes from the common game people play by setting up a long line of dominoes, but by gently tapping the first one and watching as the rest of them collapses due to the first fall. In this scenario, the scammers and fraudsters who scam and defraud millions of dollars from foreigners each year are the front single domino that is causing a lot of startup entrepreneurs like myself not to get funded, simply because most investors are afraid to invest in Africa, as they have tagged Africa as a high risk investment region where schemes of international deception to secure unfair or unlawful gain from investors abound. We in Africa ourselves understand these things are going on, so it's no surprising that investors become fearful to invest in Africa. African entrepreneurs and startups are particularly worried that the scams and fraud stories might hamper international recognition of the region's young entrepreneurs. Africa has been notoriously known for dangerous scammers with huge sums of money being duped from genuine investors who had good intentions to invest in the well-being of the African region through trade and businesses. There is not a doubt how dangerous it is to invest in Africa, or how many capable investors avoid investing in Africa, as they see Africa to be a high-risk investment zone due to the negative stories of investment-related scams and robberies, which most is really true. Some of these well-meaning investors have become victims themselves. We in Africa and the world at large are facing a challenge with utmost gravity, but human existence must go on. Hence, entrepreneurship and startup businesses in the African region still need funding amidst these scams and fraud stories. So you would agree with me that these scams and fraud stories don't only happen in Africa, it does in Europe too. In the minds of many investors, the fear of investing in Africa is actually a storm in a teacup. It's not as it seems, because the prospects of becoming a successful investor in Africa far outweighs the risk of investment. Our only hope of survival as entrepreneurs, startups, and investors is to take the unprecedented step of trying hard to live with the fear of investment around the globe, whether you're investing in Africa or somewhere else, whether in Europe or Asia or in another continent. So we should learn to invest with fear while busily impact investing in Africa. We can neither allow the scammers to freeze our investment prospects in Africa, nor spark an investor panic domino effect, pushing all investment opportunities down due to the scammers. Hence, my theme to discuss with you today in this summit is fear of investment in Africa. What makes business excellence in Africa? I'm repeating my theme again. Fear of investment in Africa. What makes business excellence in Africa? I'm trying to say, with the fear of investment in Africa, it's a good thing because there are some benefits of having fear with regards to investment in Africa. Why is the fear of investment in Africa a good thing for doing business in Africa? Well, the answer is simple. Many investors are reluctant to invest in Africa, resulting in most African entrepreneurs and businesses not having access to adequate funding. As the competition of giant companies in Africa are very small or no competition at all. So come to think about it, because these investors are fearful to invest in Africa, most companies are not funded. Hence, most companies are not competitive. These successful companies have the entire market at their disposal just because their rival upcoming competitive companies do not get access to funding and eventually run out of business. So our challenge of funding is good news for matured companies. They keep making the money while these startup upcoming entrepreneurs don't have access to funding. We should keep in mind that startup could be financed to become more financially profitable, more than a long existing business like Apple Incorporation in the USA outperformed then big giant IBM in providing personal computers to individual homes and became profitable over IBM. Before Apple started, no one believed the individual person could have his own personal computer. It was a big dream. IBM themselves were not thinking about an endeavor, but Steve Jobs of Apple was bold enough to start that, and even though he was a startup, his dream was a reality and it became successful. With less competition or no competition whatsoever, any bold investor who invests in one particular startup company usually reaps millions of dollars if the company is genuine and remains honest to the foreign investor, as the market in Africa is less competitive due to the collapse of many small businesses, which could have been funded by investors. But due to the fear of investing in Africa, they have all refrained from investing in upcoming companies. So the very few who get funded do so well because the market is not competitive. These companies who get funded go on and take on the market and do what they have to do and make millions of money and reward the investor very well. So I'm trying to say, if Steve Jobs of Apple had started his Apple Incorporation in Africa, he probably will not have made Apple Incorporation the trillion-dollar company valued today, because investors who were capable to invest in him in Africa would fear in his bold dreams, especially as he was the pioneer in his personal computer for every home industry. Over time, Steve Jobs would have either given up or diverted into another avenue of business, as he cannot run a computer manufacturing business in Africa against a giant competitor like IBM of his time, which was at the time the pioneers in computers after a long search for investors but had found none, were he to be in Africa. It also means if Mark Zuckerberg of Facebook also found himself in Africa, he would have probably not have found an investor to invest in Facebook as soon as he got investment in Silicon Valley of the USA. He will perhaps spend most of his time negotiating with local and foreign investors, as his business model required millions of dollars to be able to successfully launch in his country nationwide and expand operations into other African markets and subsequently the world. So the lesson in all these stories is delayed funding cripples most startups. On the other hand, hesitation to invest in startups brings most startups to their end, and it creates less competition in the industries. Myself and my cement company are a living proof of how difficult it is in Africa to engage with and convince a foreign investor to invest into my cement company and mobile app for revolutionizing transport payment from cash to electronic payments, as their first thoughts perhaps is my likeliness of scamming them. So due to my inability to have an investor, no one is trying to change the payment method of local transports in Africa from cash to electronic. And let's be honest, any idea that comes into the mind of a startup entrepreneur could well be the first. Any idea that comes into the minds of a startup entrepreneur could well be the first. So it also means when he doesn't get funded, that idea dies off. Not so many have such ideas and so many goals to follow. So the only option left for me is either to resiliently hope and wish I will have an investor someday, or over time quit on my tech-driven initiative and focus on my cement company and do as I can according to my capability. My only competitor, cement manufacturing company of tiled adhesives, waterproof cement, and grout cement is Permafix Industries here in Ghana. They have no major competitor nationwide besides the smaller competition. So they are reaping the millions of dollars for their investors who keep investing into the company. You can see due to less competition, investors are having good returns on their investment money because other investors are afraid to invest in startups like us, who could have equally given our investors same or more investment returns should they fearfully invest into a cement company as well. And as they invest in our companies, then they put us on a more good platform to compete with these bigger companies. I probably will also have hesitated to invest in Africa if I were an investor due to the high risks of scam stories that are going around. But it is time investors rose above their fears of Africa because honestly, your colleague investors who boldly took the risky step of investing in Africa are making millions of dollars due to the low competition or no competition at all in some particular industry. And sometimes they do not tell you. They wouldn't share this secret with you because of how profitable it is for them. Most billion or trillion dollar companies today ventured into uncharted waters, so to speak, in their respective industry of business, took a high rate of soliciting for investment from investors who were afraid to invest in their startup due to the perception of no market from investors' perspective. But later, the investors were more than willing to reinvest due to the overwhelming profits. So we can say investors can be wrong sometimes, trusting only on their intuitions, always when it comes to fearing to invest in Africa. Some of the startup entrepreneurs you turned down as an investor may well have been those who would have made the big marks on the investment industry. Why it is sometimes good to invest with fear can be seen in the story of Ma of Alibaba. The story is in part or whole similar to that of Jack Ma, founder and executive chairman of Alibaba Group. He is relentless. Jack Ma has done a phenomenal job to have created a business that is arguably second to none in the world, being the largest retailer. And my story is in part or whole similar to that of Jack Ma. Investors initially did not like Jack Ma and did not believe in his dreams just because the Chinese at that time were not much familiar with the internet. The internet were not much available in the Chinese provinces. But Jack Ma believed in his dream and he kept selling on his dream to people. So what we can learn from Jack Ma is that we should always remember it takes a little bit of craziness and madness to achieve success as an entrepreneur with inadequate funds on your own. Jack Ma was born into a very poor family with 6 people sharing $7 a month. They could only eat one chicken the whole year. For the record, it is good to know Jack Ma was rejected by more than 30 venture capitalists, but he was very optimistic and believed in the future of his company. What investors failed to see is that there was no pioneer company in the investment Jack Ma was presenting to them. So the entire Chinese market was there to take for Alibaba to make billions of dollars till a competitive company pops up in the near future. Jack Ma's first breakthrough was with SoftBank on a day after several promising startups had already pitched their executive summaries to SoftBank CEO Masayoshi Son, and was now Jack Ma's turn. Jack Ma got up without a business plan or any presentation. He just started with a story on his vision and what he wanted to do and what he wanted Alibaba to become. SoftBank rejected many other entrepreneurs, but the representative from SoftBank got excited and pledged to invest almost $40 million. And to his surprise, he was rejected by Jack Ma as he said they would need only $20 million for now. That is now known to be the single greatest investments in Alibaba, who by that time not turned profitable in the first 2 to 3 years of operation. How can a company who is not profitable in its first 2 to 3 years of operation have convinced SoftBank to get invested in them? It started with some roadshows after the investment. Finally, Jack Ma turned this into a mass movement across China, where he educated small businesses on why they needed to use the internet. He really became very famous as he created evolution by educating these commerce one person at a time. Today, Alibaba is valued at $185 billion or so, close US dollars. Masayoshi Son has reaped a whopping 50 billion value net worth of shares in Alibaba just because of his bold investment of $20 million in Alibaba. So there is no doubt, as human as Masayoshi Son was, he was afraid of his investment of $20 million into Alibaba, as the internet was not widespread in China as it is today. But he did it anyway, and today has been blessed by his bold optimism amidst fears. So this is to show sometimes when you have fears, when you are not very convinced about the entrepreneur or startup, it sometimes helps to just risk and invest. Because there was nothing special or promising about Jack Ma growing up. He himself confessed he tried to be a policeman and was rejected, tried to be a KFC person and was also rejected. He wanted to be a hotel waiter and was rejected. He then, over time, got used to being rejected and was no more worried being rejected or turned down. One of the qualities Jack Ma has as an entrepreneur is when he gets rejected by people, he gets used to it and never gets discouraged. I personally know the road we all as entrepreneurs end up on, and that road is never easy, as it is paved with difficulties, challenges, and failures, as we are left to summon up some sort of strength within ourselves, to believe in ourselves and in our dream when all our investors we engage think we are failures. Jack Ma of Alibaba, Steve Jobs of Apple Incorporation, and Mark Zuckerberg of Facebook all pioneered businesses and industries with no great competition. Africa is same due to the fear of investors to invest in Africa, which leads them not to invest in Africa, creating less or no competition among companies in Africa. The big question to ask then is, what is the solution to the fear of investing in Africa without being scammed or duped? Well, the investor has to be familiar with the common investor schemes. I would like to touch on few. By learning the basics, you can avoid surely falling victim in the near future. I will cover investment scams that you might probably run into. One of the investment scams is the advance fee scheme. The advance fee scheme involves a scammer trying to convince an investor to send them money. The scammer may, for example, pretend to be a trader who can use the investor's money to trade and earn them a profit. In other circumstances, however, the scams can be a bit more targeted by going after people who have recently lost money in a specific investment. They might promise some sort of refunding or recouping of this loss, so long as the investor first pays a processing fee. But please don't pay any processing fee for any entrepreneur or investor in Africa. The second scam is the boiler room scam. The term boiler room is simply a business term referencing call centers that use unfair or dishonest tactics. In a boiler room scam, it usually involves setting up a fake company to soliciting potential investors by phone. The salesperson will either convince you to invest in their own company or some other private firm, usually communicating their sense of urgency or huge potential for profit. In reality, there's no operation, but the scammers will often go to great lengths to convince you of their legitimacy. They may, for example, actually rent out a temporary office space or even set up a professional looking website that they could redirect their skeptical investor clients to. The moment investor wires money to the company, they close up shop and the funds are gone. You'll never find your investment fund. The third type of fraud is the pump and dump scheme. This is somewhat hard to identify because it doesn't directly involve scammers stealing your money, but it is a big problem that could make you lose a lot of cash. In this scam, fraudsters will first purchase a sizable amount of a given investment. Fraudsters will usually focus on a small public company or a recently released cryptocurrency which is lightly traded. It could be investment It could be painted as a highly promising investment, and the idea to go around to market the investment to potential investors, it's very lucrative to them. So they go around trying to convince investors to get involved in these schemes and they dupe them. They may pose as an analyst with insider information that promises big returns on the investment, or they may simply circulate social media posts that have a hot tip about this company. While this may sound not inherently bad, these individuals don't tell you they own a sizable portion of the company. And oftentimes, the information they share is partially fabricated and designed to pump up the price of the security with inflated demands. If they are successful with getting you, the investor, to invest, the fraudsters will then sell or dump their large position at a higher price. This often leads to a sharp decline in the investment prices as they sell a large chunk of the security, leaving you, the investor, behind for losses. Many fraudsters now collaborate over private chat groups, and anyone who receives stock tips online may unknowingly be helping with such fraudulent schemes. So please be careful when you're dealing with such ones. The fourth scam is the classic that you probably have heard of before, the good old Ponzi scheme. Ponzi scheme starts off like many others. Fraudster will market some sort of investment opportunity that promises high returns for an upfront payment. The thing is, the first few people to join will actually see some sort of benefit. As a result, these investors are quickly to tell family and friends about the opportunity enthusiastically, about the money they have made, and looking to convince more people to join in so they can benefit as well. So the large the capital, the more gain they have. The trick is, however, the investment is actually not making any money. They just rob Peter to pay Paul. Investors are being paid out of some of the money they or other participants have put into the company, with the fraudster taking a share of the cut each time. The scheme can keep on going as long as people keep joining, and eventually the investment will run out of money and the fraudsters will be nowhere to be found. So we should be careful as an investor when you are trying to indulge yourself into such overwhelming profits. There's also the pyramid scheme, where newcoming investors are paid more if they are actively able to recruit people to join in their opportunity. This scheme may hide under the disguise of seemingly legitimate business, but the underlying scam is essentially the same and will often lead to the same result as the Ponzi scheme. Sadly, the list of schemes, fraud, and scams goes on and on and on and passes these. For example, there are many scams out there that specifically targets those trying to access pension funds, which are usually logged into a retirement. Other scams operate in unregulated securities like binary options. Some scammers will also operate in international investments that supposedly offer tax advantages only to run away with your funds. The good news is there are a few warning common signs that runs through all of these schemes. Knowing these signs and warnings will never get you scammed. Firstly, the offer is too good to be true. The offer from the investor or scammer or someone from the other side. Investment professionals rarely promise any sort of return, and they will not really share insider information, which is incredibly illegal to do so. So legitimate investments require paperwork and onboarding. So something that involves a simple purchase or transfer of money should raise a red flag to all who want to invest in Africa. Secondly, the opportunity lacks transparency. When someone is trying to scam you, he doesn't want you to know his identity. He doesn't want to have a video conference with you. If you cannot find a professional behind it outside of their own channels or website, it is likely legitimate. Many professionals will actually be listed on an online registry depending on where you live. So you should be able to find the credentials of anyone promising to invest money or requiring of you to invest money in Africa. Finally, there are high pressure tactics involved. They won't give you the comfort to have enough time to think about what you're doing. Scammers often try to convince you that this is a limited time opportunity, preventing you from taking time to think about your decision. And if they discourage you from reaching out to a professional about second opinions, it is almost certainly because there is something fishy going on. At the end of the day, we live in a time where everything you see online could be edited or fabricated. So please be skeptical of any investment opportunity, especially those promising wealth beyond your wildest dreams. After all, if the scammer really had all the secrets that they claim to have, then they probably won't be trying to get your own hard earned cash. Any proposal to safely invest in Africa without scams should be carefully examined. If they even promise you they will not be scamming you, please examine it. So the question is, are there any safe investments in Africa at all? Yes, there are so many. There are so many safe investments in Africa. It is advisable to invest in a business or corporation through a trusted individual who will be solely responsible for all your subsequent investments in Africa. This person, seeing to your investment, should not have a master's degree or a brokerage certificate before you entrust him with your investments in Africa. All he needs to have is a track record of absolute honesty, transparency, genuineness, and loyalty to your interest in every investment you do, and the person should be willing to stand up against you when you want to do a shady, dubious, or illegal deals. This individual may be the managing director, chief executive officer, or a general manager of a known legitimate company like myself, or an entrepreneur startup who has the expertise to manage or mobilize a team to manage your investments well on your behalf with your regular consent over online, or you're coming to Africa in person occasionally to follow up on your investment and returns. You could both agree to a mutual memorandum of understanding with regard to your investment focus as you provide your representative in Africa with all he needs financially and emotionally to successfully execute investments on your behalf based on absolute transparency, loyalty, and trust. So it is very much possible to have a safe investment in Africa. But we should always keep in mind data is incredibly powerful and dangerous resource for scammers. By learning people's identities, their location, and their online history, they are able to better target their victim and convince individuals of their legitimacy. It is why now, more than ever, you need to take the right steps to protect your browsing activity, location, and other details from fraudsters online. So please do not send sensitive information via email platforms. If possible, do that via trusted means of transferring files such as a certified postmail or encrypted messaging apps and links such as the Signal messaging app or NordVPN. Investors who want to invest in Africa should not be throwing money into numerous companies, but rather should invest in one or two corporations through a trusted individual. This reduces the risk of scam and fraud from different angles and gives you the assurance of trusted due diligence on all your investment through one trusted person before it is invested, whom you could hold accountable through his company when you are not satisfied. What do I personally have to offer? As already stated, I have since 2016 founded a cement company called Ghana Ghana Limited, also known as Ghana Cement. We manufacture tile, adhesive, waterproof cement, and grout cement. We are now also venturing into the mobile app development industry due to the COVID-19's eye-opener on the great opportunity of a software as a service company to reap profits in short time and pay investors well on their returns even during a pandemic. It is tech's moment. Technology companies are making profits during this pandemic. Lockdowns and quarantine does not affect financial performance of tech companies. There are sector-specific lessons to be learned from COVID-19. Here is one. Technology really is driving the future, and most investors would be wise to bet on it. And even when you might think it's too late to invest in a tech company, it might not be actually too late. Consider this. If you bought $1,000 For example, worth of Zoom stock on January 31st, 2020 at about $76 per share, you would have had about $4,200 today. It sits at around $330 per share today. That's a great return. It's not that bad. But say you waited until the end of March, at which time it seemed everyone you know was suddenly using Zoom for several hours per day. Was it too late? Hardly. Zoom had only risen to about $150 per share by then, so you would have about $2,150 by now. Not too shabby, right? I come from a poor family just like that of Ma of Alibaba, but I have founded my cement company based on absolute loyalty, trust, honesty, and transparency to clients. These positive traits keeps me going despite my financial struggles to keep company operations fully funded. I strongly believe honesty, truth, loyalty, and trust plays a significant role in becoming successful as an entrepreneur startup seeking for investments from foreign investors willing to invest in Africa. I am open to receive investment offers and to manage investment for an investor who wants to invest in Africa, as we will work together always on decisions in the interest of the investor and myself. I would also like to humbly say the negative impact of COVID-19 has been the major motivating factor that is moving me to embark on a mobile app which seeks to solve the challenges of poor transportation in Ghana and Africa as a whole, reducing risk factors with regards exposures to COVID-19 or any other virus-related pandemic in the near future. The popular method of payment for public transport is physical cash, but due to the COVID-19 related safety guidelines, we could use this year and next year as a timely opportunity to insist on passengers using electronic mobile money payments in replacement of the old-fashioned cash payments, which is dangerous when passengers would have to touch monetary notes perhaps infected with the virus. I believe it would make perfect sense to be the pioneers in transitioning the payment method of public transports from cash to electronic payments in Ghana and sub-Saharan Africa. The COVID-19 crisis was the ultimate affirmation of the golden rule of investing, which is buy and hold. Your aim as an investor should be to find high-quality companies in Africa and hold on to them for as long as possible through good and bad times. This entails seeing a company through rough times in the short term with your eye on the long term. Investors are often waiting on something. I'll invest when the dust settles. I'll invest when the vaccine gets here. Right now, it's pandemic, so let's wait a while. The best startups and founders who can survive COVID-19 are the ones who can manage your investments well even during crisis, as most really care for their respective companies as they care for you, the investor. With all the noise of market volatility, it can be tempting to try to wait out for a best time when the pandemic is gone. But let's bear in mind the market has steadied and is on a consistent upward trajectory. Though it might not seem like it, that inertia of waiting until all is calm can be a mistake in and of itself. Please don't wait. The best time to start investing in Africa is always now. No one knows when this pandemic will be eradicated. It is good to sometimes invest during a pandemic, as most of the competitive companies are slowing down or being hit by the pandemic. So when a startup gets funding during the late part of a pandemic, that startup will better be in the position to capture the industry's market when pandemic situations calm down and companies once again begin to seek funding. The invested startup might have already left the train station long time, so now is the right time to invest. On behalf of my staff and company, we thank you all for your audience. I am open to any investment opportunity into my cement company and my mobile app project, or to follow up on any investment opportunity for any foreign investor as a representative. Mr. Martin Signer, Managing Director at For Finance and Smart Money Match, has been a very good friend and support to my cement company. We very much appreciate your hard work, Mr. Martin Signer, for making this Smart Money Match Capital Introductory Summit a reality. I am hoping to have a business partner soon with regards investment funding to expand my cement company operations and also to invest in our mobile app project. My greatest assets I can offer are my absolute transparency. My greatest assets I can offer now are my absolute transparency, candid honesty, resolute loyalty, and faithful representation of your investments in Africa. Making money is much easier with such traits as long-term relationships in businesses and good reputation are built not with lies but with the own truth only. I will never be involved in any shady, dubious, suspicious, or potentially immoral or unlawful arrangements, even if you force me to as an investor. I will always be responsible to be as candid and honest for you in your best interest, even when we disagree. With time, perhaps you might appreciate my ethics and moral principles, which aids in business excellence on the long term. I would like to conclude by saying the fear of investment in Africa is good for business excellence in Africa, as there is no competition. So please invest safely in Africa even when you fear to. Now is the time to invest before other investors do. Thank you very much for your audience.